Starting today, mortgage rate fees changing. An independent federal agency that oversees Fannie Mae and Freddie Mac announced the changes earlier this year. It means certain people with good credit are going to pay a little bit more for a mortgage, while those with less than good credit, they're going to get a break.
Boston 25 News reporter Jason Law live now with two important factors if you happen to be in the market for a new home. Jason?
Hey, Mark and Vanessa, it really comes down to two things: the size of your down payment when you go to buy that new home and your credit score. And people out there with good credit may not like what they're about to hear.
So the first chart is currently, and this is what it was previously.
Southeastern mortgage lender Jeff Mancovsky walks us through the different fees that could result in a home buyer with good credit paying more for their next house.
A lot of people just don't understand the changes that have occurred.
The Federal Housing Finance Agency is overhauling the loan level price adjustment fees. These are fees that are often rolled into your closing costs. Take a look at this chart from Housing Wire. The dark red section is for buyers with credit scores of 700 or higher. That's where the fees have gone up. The areas in green are for people with lower credit scores and lower down payments. Those fees have gone down.
Who is this geared to help?
It is geared to help people with lower down payments and people with lower FICO scores, not terrible FICO scores.
The buyers taking the biggest hits are the ones with a 720 to 759 credit score who put 15 to 20% down. They'll face an increase of 0.75% or an extra $3,000 on a $400,000 loan. However, someone with a 659 credit score borrowing 75% of a home's value will now only pay a 1.5% fee. That means $3,750 less in closing costs on a $300,000 loan.
We're in a market right now where the inventory is so low.
Verna Brown is a mortgage lender in North Attleboro. She questions the timing of these changes.
To increase the rates at this point, or increase the adjustments at this point, just seems like, a bad time.
Now, this announcement earlier this year did draw a lot of criticism from the housing industry, and because of that criticism, the government agency behind the decision actually put out a statement last week. This is from the director of the Federal Housing Finance Agency. Quote, higher credit score borrowers are not being charged more so that lower credit score borrowers can pay less. The updated fees, as was true of the prior fees, generally increase as credit scores decrease for any given level of down payment. In Southeastern tonight, I'm Jason Law for your local station, Boston 25 News.
Jason, thank you. And today, state treasurers from 27 states urged the Biden administration to stop this practice. Massachusetts State Treasurer Deb Goldberg was not one of them. We did reach out to her office today to see if she had a comment on the new mortgage fee structure. If we hear back, we'll let you know.